Welcome back. Today we're going to be doing a valuation on Facebook, a stock analysis on Facebook right after they just reported their Q1 earnings. In this video, we're going to quickly go over the main takeaways from Q1 earnings, going to do a deep dive into the main drivers of Facebook, and then lastly, we're going to go through our valuation model and how we view Facebook stock currently. So let's get started. So from the latest takeaway of the quarter, you can see here that revenue has grown, is in the uptrend from last year. The revenue was around $26.1 billion, again, substantially from advertising. The other segment is picking up some pace, but we'll talk more about that when we get to our valuation model. Then expenses, you can see, also has been pretty stable the last 8-9 quarters. Their expenses are quite in a range bound between a certain amount. So this is from the latest quarter, and I just want to highlight a couple of things that Mark Zuckerberg stated during the earnings call. And here they have probably the most meaningful part of the earnings call is they're highlighting that about 1 billion people are using Marketplace each month. And that's going to be substantial going forward if Facebook wants to monetize the e-commerce side of their business. That is going to be pretty big going forward. And they just launched shops last year. That is also something that I highlighted, with 1 million monthly active shops and 250 million shop visitors. This is important going forward because the two big things that the company is going after in this latest quarter that they announced is going after e-commerce. If they're able to advertisers be able to market their products on their platform better, and possibly Facebook is able to have a take rate and facilitate that transaction similar to what Amazon and eBay does. That is one of their potential revenue streams going forward. And they also stated that the way that businesses can communicate with their customers, something where WhatsApp and Facebook Messenger, you have 3 million advertisers right now that use this click to message feature that allows customers who see businesses page, they're able to connect directly to that business, ask questions, get answers to questions, and then about their products and services. So this is really what is a driving force of Facebook going forward. Facebook is in the advertising market, and it tends to be pretty cyclical. Q1 generally is the lowest operating margin for the company, and it ramps up, and Q4 is usually the highest, with a lot of businesses advertising their goods for the holiday season. So there's always this range that companies really trade when every year when they report. Q1 tends to be the slowest, and it gradually picks up to end the year off with their highest operating margin. So let's go over the platforms. Instagram is a huge driver of Facebook right now. Their advertising is estimated to account for about 16.5% of their total advertising revenue. Expected to be a huge main driver of Facebook going forward. A lot of user growth on that platform. You can see the growth of Instagram's advertising revenue the last couple of years has outpaced the main Facebook platform. So this is going to be a huge driver of Facebook going forward, is how well they're continuing to monetize the Instagram platform. The second part is WhatsApp. WhatsApp right now doesn't really contribute any revenue to Facebook's advertising side at all. They don't really contribute any revenue. They acquired the company for $19 billion, and right now they have roughly around 2 billion users. But this is something where I think Facebook, from a business standpoint, isn't really looking to put ads on the WhatsApp platform. And this is something that was stated in this article here that says that what's for how they want to make money is really more about how businesses are able to connect to their customers. And that's something that I highlighted just earlier on what they were stating in the latest earnings call. So they don't want to just put ads in when you're messaging someone and you have ads. It degrades the product. So what they want is for businesses to be on WhatsApp and be able to have businesses easily connect to their customers and find some way to monetize that going forward and have diversify their revenue stream. So let's go over my valuation model in the last video that I made about Amazon, which you can see linked down below as well, part of the valuation series. I went through the whole Excel spreadsheet and it was kind of hard to see. So in this, I'm just going to take screenshots of my model and just pretty much go through how I got to my valuation. I would say Facebook, the model is generally easier to model out than Amazon, and there's a couple of reasons for that. One is Facebook's overall business is more straightforward than Amazon's. They have two segments, advertising and other. And this is right now the DCF that I created for Facebook. You can see going forward that this is the DCF, and I have an exit multiple model as well for Facebook. But in this model, you can see that we see the company continuing to grow and de-accelerated growth over the next 10 years. But eventually, it grows to year 10. You have a terminal growth rate of 2.25%. All in all, cost on capital 8%. That's fairly standard. You have an operating margin around 38%. When you take a look at the advertising business, this is something that Amazon's really looking to get into this business because really high operating margins. You look at the past 5 years of in Facebook's operating margin, it's pretty stable in the mid 30% range. So we have that carrying on for the next in the foreseeable future. And the main takeaway is the valuation that we get for Facebook stock today is around $420. And the current stock price of Facebook is right around $325 when I'm making this video. So that implies around 29% upside from today. This is another model that I created. This is using an exit multiple 4 years out into 2025. This way of modeling is a little bit more accurate in terms of how much you can see. You can pretty much accurately forecast a company's revenue. Really, 4 years is probably the most accurate that you can really be before it starts to be really guesswork at that point. So this model that I did is different from the DCF, where I again break down each of the revenue sources of the company. For Facebook, it's really simple. It's advertising and other revenue. What I have in this model is currently in 2020, their other revenue still was around 2% of their overall total revenue. By 2025, I see that picking up to around 5%. I think they talked about the AR/VR as something that is going to be a big driver for the company going forward, but I see more on the payments and business messaging. I think they can monetize that. It's more foreseeable for them to monetize the marketplace and business messaging, maybe facilitate payments for transactions on the marketplace. So that I think is going to substantially be growing in the next couple of years. Advertising is still going to be pretty stable. The overall Facebook platform seems to be still very robust. And so with a operating margin, again, roughly in the mid 30s, you come here and you can see that net income for the company in 2025 is around $71 billion. If you take the current shares outstanding of 2.85 billion shares, because this is in millions, you get roughly $25 EPS in 2025. So that's not a bad deal for this company. If you do the PE ratio or EV to EBITDA multiple on this company, so this is the exit multiple on the company, you can pretty much get a share price of 625 if you put a 25 PE ratio on the company. Now, remember, this is at the end of 2025. If you do the EV to EBITDA model, you're going to get roughly around $600 on a 15x EV to EBITDA. So the current stock price is 325. So the CAGR of that between now and the end of 2025 is roughly 13% for this company. So we see Facebook as being currently undervalued based on the valuation that we have created. And let's just talk about what we think. We have a buy rating on Facebook. We don't own a position in Facebook, but any really ETF in general, not just tech ETFs, all pretty much have a position in Facebook. I think the value of Facebook is definitely, there's more value in Facebook than Amazon at this point. And check out the Amazon video as well, because when we did that valuation, it seemed like Amazon was pretty well valued by the market. We see the biggest catalyst is for Facebook to continue to grow out their other revenue segments. That's in Facebook Marketplace, Shops. If they're able to monetize WhatsApp to some extent in the next couple of years, that's going to be a key driver. AR, VR is a little bit more iffy. I think it's harder to see how Facebook will monetize AR, VR, and if the market is still viable. I think right now people are still trying to figure that out for Facebook on that end. There's medium-term headwinds with Apple's IDFA and the deprecation of third-party cookies. I mentioned this in our Magnite stock analysis, but overall, I think they're going to be able to overcome these issues in general. Digital advertising is still growing, taking up every year it's taking a larger and larger chunk of the overall advertising market. And advertisers are still able to see huge potential value in advertising for Facebook, Instagram, these two platforms. So in our view, I think the breakup and antitrust concerns of Facebook is not something that investors should be really worried about. If Facebook is to be broken up, the sum of the parts probably is worth more than the actual company. So the largest risk for Facebook really is if you have new social media players coming in, a platform like TikTok and these other platforms coming in, if they're able to substantially disrupt Facebook's moat. But even that is pretty hard to see because Facebook has been the number 2 largest advertising platform next to Google, and that has been held pretty well even after all the controversies going on with Facebook. I just want to give you a macro picture of the advertising market and talk about some of the risks of Facebook going forward. Again, in this chart, you can see that Facebook is the number 2 player in this space. Amazon has been gaining market share, advertising mainly products on their own marketplace. But for Facebook, they're able to do products, services. That is something that they have held the second position for a pretty long time. advertisers are still getting a lot of value from Facebook. You see a lot of controversies with Facebook last year had ad boycotts. They had Cambridge Analytica. I believe that's mostly just noise for this company. You have to look at the macro picture of the space that they're in. They have a ton of tailwind. Advertisers see the value of advertising on Facebook and Instagram. They're getting a pretty good ROI on the ad spend. So this is the biggest thing for the antitrust issues. The one thing is, the reason why our model seems to be pretty stable is, in order for Facebook to grow substantially beyond our model, I think they will need to make another big acquisition. And that is going to be much harder now that the EU and the US government, they are putting Facebook in a lot of scrutiny. So it doesn't seem likely that Facebook is able to make some really meaningful acquisition like Instagram, like WhatsApp, and Oculus even on the AR VR side as they did in the past. So that makes my model more stable, whereas for Amazon, they are seeing a lot of avenues of growth in their other segment with logistics and all that other category. You can check out the video for that. But I just wanted to make that point. So really appreciate you watching to the end of the video. Please comment down below what you think of Facebook. If you own any Facebook stock, what are your thoughts about Facebook? I would love to hear about that. Like the video if you can. Like the video, share the video, subscribe. This is the second video in our FANG valuation series. The next company we're going to cover is probably Google, Alphabet, because they're pretty related, and we can do a comparison about Facebook and Google, see any similarities. But subscribe, a lot more stock analysis videos coming in the future. I appreciate you watching to the end, and I'll see you guys next time. Peace.